Well, guys, the crypto fear and greed index is now down into the fear side of the equation. And if you've been paying attention to the crypto space over the past couple of weeks, you know that it's just all been doom and gloom and fear and panicking and FUD floating around. And so in today's video, I'm going to talk about what's been happening since I did my video last month and give you kind of a state of the markets, if you will, for Bitcoin and crypto, and also talk about the inverse relationship that we've had between stocks and crypto over the last month, and also give you a lesson on how to read charts the right way, because I just see so much, again, FUD and fear and just misinformation out there. And so I want to kind of set the record straight. If you're new here, I'm Chris Dunn. I'm known as the world's first Bitcoin trading and investing educator. Been doing this for well over a decade and helped onboard a lot of people into Bitcoin when price was below $1,000. So with that said, if you're not subscribed, go ahead and do that. And let's jump right into it. So the first thing that I want to talk about is zooming out into a very big picture time frame. And we'll talk about why I approach TA or technical analysis this way. But what we're looking at here is the 12-month chart on TradingView, which every one of these candlesticks represents 12 months or a year of price action. And I want to talk about the right way to actually read these price charts. And really what this is when you're looking at any kind of price chart is you are looking to predict the flow of people, right? Because price action or these candlestick bars or whatever kind of chart you're looking at, those charts are just a visual representation of the actions, AKA the flow and the movement of people, right? It's a visual representation of all the buy and sell orders that actually get executed in a market. And different chart time frames. So you could be looking at, a 5-minute chart, a monthly chart, a yearly chart, right? All these are just different zoom levels giving you different perspectives on the market. And when you're looking at large time frames like a yearly, a monthly, or a weekly chart, this shows the bigger picture and longer term like migratory patterns, right? The longer term flow either in or out of an asset class. And when you're looking at smaller time frames like the 1 day, the 1 hour, or the 5-minute chart, this shows the more immediate reactions and the current flow of people. And so let me just give you kind of an analogy here. So think of like the yearly chart or the 12-month chart as like you're sitting in the International Space Station looking down on Earth, and you can clearly see the lines that divide major land masses like continents and bodies of water. You can see oceans, you can see maybe large migrations of animals through the African plains, right? But you basically have a very full picture. You can see the whole thing, right? And you can't see a lot of detail, but you can see the bigger picture. Right. And that's why whenever I'm doing TA on a market, I like to start by looking at the 12-month and then saying, okay, where are the continents? Where are the major areas? Where are the major dividing lines between oceans and continents? And think of that analogy and now turn those words into things like support and resistance, right? So you can see very clearly here, there are major levels that are very, very clear on the 12-month chart that are very hard to see. Like if you're looking at an hourly chart, you're not going to be able to go back and see support and resistance that have established themselves over multi-year or multi-decade timeframes, right? So that's where sitting in the International Space Station can be very helpful. Now, the level below that is like a monthly chart where imagine you're flying in a 747, or maybe not a Boeing plane, but imagine you're flying in a big plane at 30,000 plus feet. And what you can do is you can start to, like this picture, you can make out things in a little more detail where you can see larger structures like cities, mountains, lakes, forests, right? So going down to the 1-month chart, and again, every candlestick represents 1 month. And whenever you do this, you can start to see more immediate flows of people, right? With a little more detail. And then going down from there, we go to like a weekly chart where you're sitting on the top of Mount Fuji looking down at the city. You can, at that point, start to see individual flows of traffic and individual flows of people, like neighborhoods, right? You can not just see a city and a whole bunch of messiness, but you can actually see neighborhoods. You can see parks. You can see like central business districts or, shopping zones, malls, things like that. And that's where, when you go down to a weekly chart, you get even more color, right? You get even more detail, and that can be helpful for finding more immediate support and resistance areas or price patterns that can, again, help you to try and understand what you think people are going to do in the future, because ultimately that's what trading and investing is all about, is trying to understand how people react to certain price movements. And if you have an idea and you are right and you place money on the line based on that idea, that's how you make money. All right. So going back to the analogy, let's say a daily chart, so a 1D where every bar represents one day. That's like standing on top of the Empire State Building, looking down at New York City, where you can start to see the flow of people in traffic, right? You can see individual vehicles, pedestrians. You can see groups of people, like protests or parties, right? But you can get a sense of where people are going to and coming from. And then the smallest, and I really don't go much more in detail than an hourly chart, but you could apply this to like a 5-minute chart, a 15-minute, or a 60-minute, aka hourly chart. This is where, when you go intraday, so again, you're looking within one trading day, looking at all the action that's happening over the last several minutes or hours, that's where you can see the individual person's direction that they're walking or running or crawling, right? So you could see people standing in line. You could see them walking across crosswalks, running for their lives, maybe panicking, right? That whenever we have price that panics in Bitcoin, that's what I imagine, is a whole bunch of people losing their mind, rushing for the exit, or celebrating, right? Whenever Bitcoin's hitting new all-time highs, I imagine people outside just partying. And there I am in the cafe, just sipping my coffee, trying to understand what I think people are going to do next, right? So hopefully that analogy can be helpful of just like how to think about price action and why I think it matters and why it's important to zoom out first, right? So this is where I always start, is looking at the big picture. And this is where I try to mostly trade around, is the major zones on the bigger time frames. So I categorize like the weekly, monthly, and 12-month as kind of the major time frames, and then the daily and the 1 hour as my kind of short-term time frames. Okay, so let's talk about what has happened with Bitcoin over the past month. So I think I did my last update video about a month ago, and we had like 5 touches of the all-time highs, and it was looking very bullish, right? And then Mt. Gox came out and they were like, guess what, guys? We are going to release about $9 billion worth of supply, which at the time, and it's still currently about 0.7%, so less than 1% of the Bitcoin supply, but that's not insignificant, right? It's a pretty large amount. And what that did is it changed the perspective of people on that kind of shorter time frame, right? Imagine you're in the cafe and like people are walking east, and then this big scary news comes out. And then some people are like, I'm going to go ahead and turn around and walk the other direction. And then that selling is like reflexive, where selling begets more selling. And then, people that are late, they panic rush and they start following. And the next thing you know, there's just a whole rush of people running and nobody knows why the hell they're doing that. That's a lot of times how the markets actually work, right? It's no more complicated than just the irrationality and the emotionness of people. So I hope that makes sense. But what has actually happened over the last month is, let's take a look at the inverse relationship between Bitcoin and stocks. So again, this is the 1D or the daily chart for Bitcoin. And if you look at the start of the year here, we basically, after the ETF approval, we had a run from like 40,000 up to around 70,000. Then we had a pullback and a retest, right? And that retest, this is where I did my last video. And I'm like, hey, we've had almost half a dozen touches up here. Things are looking really bullish. And then the Mt. Gox thing the whispers started to come out. And then it was like, oh, we got a little bit of a panic. What happened is, if you look at this circle, and if you compare stocks were actually very, very correlated with Bitcoin during the first half of the year up until June. And actually, I have a tweet that I can pull up here where I talk about this. But the idea is right here in early June, stocks broke out to a new all-time high as Bitcoin was actually selling off. So this was an inverse relationship. And typically what we see is when stocks go up, at least this is how it's worked over the past several market cycles, stocks go up, Bitcoin shortly follows. Stocks panic like in 2022, Bitcoin follows. So this was a little bit different and caught a lot of people off guard. And that's why we had that liquidation event where we snapped below 60K and are currently testing the mid 50s right now. Okay. So that's what's happened over the last month is we had things like large cap, like Nvidia and Apple, and just basically most large caps where they broke out here in late May to early June, right? Let's look at Apple. You can see a lot of things are still breaking out and testing or breaking out to new all-time highs, right? So there's always a story, and you can always come up with a bull case. You can always come up with a bear case, and you can pull up like CoinDesk or any other news site on any given day, and there's going to be a reason why price went up or down. Like, watch this. This is just random, but Bitcoin drops as German government unloads over 900 million worth of Bitcoin, right? Let's see if we can find a bullish one. Bitcoin ETF investors bought the dip on Friday, right? And I've said this for over a decade and I still believe it. Do not read articles and try to make buying or selling decisions based off of articles. This, most of the time, will put you on the wrong side of the market. I always like to see what the stories are, but I don't let them influence my behavior. In fact, what I do is I back up, I look at the larger picture, and then I remind myself that price action is truth, right? And I say, okay, what are people doing and what do I anticipate them to do in the future? So like, I'll give you my thoughts right now. This is now I believe the sixth pullback of over 20% since the start of the bull market back in January 2023. So it's been a year and a half of a bull market. And this is the second time now that we actually broke below the 200 period moving average. And this is what everybody's freaking out about. And yeah, I mean, this is technically a signal of a shift in market structure from bullish structure to bear structure, but it doesn't mean that we have to go into an extended bear market. Here's an example. So what happened last summer, actually almost a year ago, was price shot down below. It got rejected from the major $30,000 price level that we can find on the 12-month chart. We had a couple of days of selling and then it stabilized here at multi-month support around 25K. And then it consolidated for a full 60 days. So for 2 months, it consolidated before squeezing these shorts, right? So think about that. Markets move with this explosiveness, consolidate, and then move again. And that's when we went back into a bull market. So this was actually the longest consolidation period overall that we saw in a long time. It was over 200 days around that 30K zone. And then right now, we're seeing kind of similar price action where we had a 2 or 3 day panic. And what was interesting about this is this actually happened over the 4th of July holiday. So to me, this doesn't signal like institutional selling. Like, yes, there's always a story. You've got Mt. Gox supply, you've got German government, you've got Silk Road coins, whatever. There's always a narrative. And then on the bull case, you've got some FTX potential buys, whatever. Price action is truth. So what is the price action saying right now? Well, yeah, we broke below the 200 and we're using it as resistance. And so now we are stuck in between the next major level of resistance turned support at 52K. And so because we haven't actually panicked more than the typical pullback so far, I'm still just holding. So if we get a large washout of over 30%, I know what the probabilities say about that. If you get a large washout in a few days on Bitcoin, the counter trend moves can be really, really juicy. Or if we squeeze shorts, great too. So as of right now, I'm still holding. Again, that's Bitcoin. And this is why I've been biased so much towards Bitcoin, is because alts have been underperforming massively. So if you look at total 3, this looks even more bearish, where you've got lower lows, lower highs. Others, where you exclude the top 10 market cap, this is even much further below all-time highs. Okay, so again, I think this market cycle, this is something I've been talking about since the bull market started, was flight to quality, right? If you're going to trade alts, be in and out and maybe hold a few longer term swings, but this is definitely not a shotgun market where you just want to spray capital everywhere. So I hope that's helpful, guys. Again, if you have any comments, feel free to leave them below. One thing that I wanted to let you guys know about as well is the fact that we are actually doing an in-person wealth building retreat. It's a 4-day, 3-night event in Austin, Texas in mid-September. So we're going to have some VIP dinners. This is going to be a really small group. And we're doing something that we've never done before, which is we're bringing in a financial advisor. As you guys know, nothing I talk about here on YouTube is financial advice. It's education only. But at the event, we're bringing in Nikki, who's a financial advisor, who's going to sit down one-on-one and give you guys the opportunity to look at your portfolios and basically, get financial advice. So that's something we have not done before, but we're really excited about. So go to wealthbuildingretreat.com. If this page is up, that means there's still a few spots left. This is going to be, again, a really small group, intimate, and a few days of just really intense live trading and 60-minute training sessions, also networking with other millionaire traders and investors and people that are newer to the game. So networking, education, and we're going to have some adventures and some fun. So again, I'll link that up in the description. Go check that out. It's been 5 years since we did our last event, which was in Amsterdam. And then before that, we were in the Cayman Islands, and when I sent out a survey, everybody said they wanted to go to Austin. So that's what we're doing. We have a lot of people there. We have a lot of connections, and we're going to have a lot of fun. So go ahead and sign up if you haven't done so, and make sure to like this video if you got value from it, and I will see you guys next time. Take care.